Now with fixed volume profile, you stop guessing and have a strict system that you can look out for, and you find nearly every day a clean setup when you use fixed volume profile. On here on the NQ futures chart, you probably know from my other videos, I'm using the overnight session and I am using the New York session, right? So that's my main setup right here. The fixed volume profile right here is one of my most used drawing tool. You can draw from the low to the high and you get this volume profile. You can really quickly understand as the video goes on what I am meaning and what I'm looking out for when I'm using fixed volume profiles. The first thing you need to understand is these three things I'm always looking out for. First is, are we in a ranging market, or are we in an impulse to the upward side, right? Or are we just downwards trending, right? So these are the three phases that the market does. And now it's really important that then on a sideways market, you should look out for reversion trades. What I mean is, if you have this profile right here and it's in D shape, right? So you have the D shape and you look for reversions. So you look for selling the high and buying the low. Now on an upwards trend right here, what you look out for is a P-shape formation on the volume profile, right? So you have here value area low, value area high, and point of control. So that's right here, it's a P-shape formation. And then you have this downtrend right here. That's a B-shape formation on volume profiling. These three things is all you need to succeed in the futures market. So you have sideways movement, D shape, you have upwards movement, P shape, and you have a downwards movement, a B shape. So that's all you need. So make a quick screenshot if you want, but these shapes right in here are important. So that is what I'm looking out for. Now, how we can now implement this on the real markets. Now, as we know, guys, we look out for an impulse and a base on an upwards trend. So we look on the overnight session right in here and we look for a breakout and hold above value. If we hold above value, then you should look out for your P-shape formations. Now, right here in this scenario, we can see we are holding outside value clearly, and your first impulse is this breakout right here. This is a sideways movement. This is your breakout to the upward side. We can go with the volume profile from the low and draw out this whole impulse and this correction. Let's go back right in here. And now let's jump on the 1 minute chart. So your entries should always be on the 1 minute chart if you're using fixed volume profile like this, okay? Now you can clearly see what's this formation right here. This formation is a P-shape formation, guys. Now what we have learned is we look out on the value area low, or we look out for a breakout to the upward side. Now this is so crucial to understand. On a P-shape, we can as well break out to the downward side and then can break back into value. And as soon as we break back into value, this is one of the high probability trades that you can find on a trading session, really. So if we break out to the downward side and then you see a push back and we hold back into value, you can definitely look out here for a buying position to value area high and then watch out for a breakout to go higher. So that's one of the best setups that you can find. But right now, what we can do, we only can wait that the market either goes to the upward side and breaks out, right? Because as we know, P-shapes are most likely to follow higher value. Now you can see how you can get a whole trading plan around it only by drawing the last low to the high, and you can see the P-shape formation. Now you can determine what should I do next. Now it really comes to patience. We only wait a breakout, or we wait to break out to the downward side and a push back in. Now let's play this now further out. So what you can see right here is that we are breaking out, right? But guys, don't enter if you see little candles breaking to the upward side, okay? We need a really push to the outward side of this P-shaped formation, supported by buying delta, and then you're good to go. or you wait for a push out, a retest of value area high, and then a long position. Okay, so let's play this now out and see what's happening right here. So we can now see that this whole zone right here, right, we are clearly breaking out and we are holding above value. So this should be a no-brainer to look out for a buying position, right? So you can look out for buying delta. If there is buying delta, then you jump here in, stop loss goes underneath point of control right here. That's your safe stop loss. Now you can see only by using this drawing tool, I know where should go my stop loss, right? Where is my entry? So let's see if this would be a successful trade right here. So let's play this now out, and you can see that we are coming back, and now you can see why I'm so happy that I'm taking my stop loss underneath the point of control. We push out, we come back to retest value area high, and then we going further to the upward side. So let's see if we push here a little bit more to the upward side. So now we can see that we are clearly pushing to the upward side. So you should probably go now to break even or put out one contract and let one contract run. So that's the whole scenario you should look out for when you are on a trending market. So that's really all, guys. You wait for a hold above value from the overnight session. If we hold above, then you look out for a P-shaped formation, and you can do this all over again, guys. If you can see another push up, a base, you draw your fixed volume profile, you wait either for a breakout or value area low. So that's all on a long position. Let's go now here back a little bit more and let's see on a downwards movement. So let's see right here, we have the overnight session, we are holding underneath value clearly. Now let's zoom here a little bit in, and now you can really see I don't even need a volume profile to determine that this is a B-shaped formation, this is a B-shaped formation, right? So every time we're pushing to the downward side and we're creating a base, that's probably a B-shaped formation right here. Okay, so let's see right here, if we draw the fixed volume profile from this high to the base right here, what we have clearly, guys, is a B-shaped formation. And what we have learned for B-shaped formations, that the market should look for lower value. And now I'm here on the 5-minute chart, and you probably can see that we're breaking out of the B-shaped formation. We are retesting value area low and we're going further to the downward side. So let's go here back to the replay and let's see what's happening in here on this B-shaped formation. We're jumping into the 1-minute time frame. So what we are now looking out for is for this value area high to sell, or the breakout of value area low. That's all you need. And again, guys, you see how simple it is. I only need to draw this box on value area low and value area high from the overnight session, wait for a breakout, wait that the market holds underneath, and then I'm looking for a B-shaped formation. So let's see what's happening right here if I play this market out. So we can see that we are pushing to the downward side, right, and we are getting this breakout. Now, so important, really so important that you look right here on the delta, on your bubbles. If we get here high selling pressure, then it's a no-brainer to immediately take this breakout to the downward side. Okay, so let's say we are seeing here selling bubbles, really high volume selling bubbles right here, and we are going right here in as soon as the market breaks here out. Now, as I said before, your stop loss should go on point of control. Now, but it's not always the case, guys. Really, you need to look out for a good risk to reward. And what we have here is a high volume node. So this right here would be for me a no-brainer to look out here for my stop loss placement. And then I'm either looking out for 1-to-1 or let winners run, right? So we have a safe stop loss. We have a good entry right here, and now if the market decides to come here back and retest this, you can scale in. Okay, so let's play this now further out, and you can see the market comes back, retests my value area low zone. You can scale in or you can only let this trade run, right? You can see the market is searching for lower value. Now what we can now see right here as well is that this is actually a push down in the base, right? So from the high to the low right in here, what we have again, a B-shaped formation, and this right here gives you such a good risk to reward. Now again we have a B-shaped formation, and now we are breaking out. If we are supported from sellers, you can take this trade. And now you can see as soon as we break out right here, we take this trade, and look at this. Where is the point of control? Right in here. So your stop goes above point of control, and now you have a really tight stop loss, and now you can target either on the left hand side for value areas, or you can let winners run. So let's play this now out, and you can see the market pushes to the downward side immediately. Okay, so that's on B-shaped formations. Now the last one is a little bit different, and it's a little bit harder to trade. That's why I prefer trending markets, because it's so easier to trade. You have B shapes or you have P shapes, right? So it gives only these two options when the market is trending. But if the market goes sideways, that is where the most traders lose money. And how you can avoid this is by looking on the overnight session. So guys, right here, we draw this out that you can understand what I'm meaning, and then that you can understand what I'm looking out for. Now, if the market decides to push outside value, right? So we are pushing outside value right here, and we don't hold underneath value, then you look out for your mean reversion trade. So as soon as the market breaks back into value, you look for value area high. And if the market cannot hold above value area high right here, you look for a break back in, and then you look for value area low. And as soon as the market stays and holds underneath value, you look either out for selling the market or buying the market. Now this is why I'm saying that rotational days are so harder to trade. You should definitely look out for a trending market. That's 10 times better. And if you get a ranging market, you just don't trade this day. So I hope you enjoyed this. If you have any questions about this, then leave a comment down below. I will do my best to answer this as quickly as possible. I hope you found it helpful. If you do so, hit the subscribe button, and we see us on the next video. Peace.